Then you explain the threats. You apply our normal distance. You explain the threats. What can go wrong as a result of providing such services? They said from this, payroll services was provided by the auditor. So they've already provided it. They now said, agreed total figure estimated to be this. They just agreed the numbers to the payroll. They did not audit the payroll because they believe we were the one that provided the service. So you must explain the threat. Okay, then you evaluate it. And obviously we've talked about materiality. Is it significant? Is it permissible? That permissibility is what we are looking at here. Is it permissible? Okay, is it permissible? So as I said, same independence requirements as group auditor applies to what? Component auditors. Unless theirs is stricter, then you will now apply by talking about what the ISBA code requires. And what does the ISBA code require? It is prohibited for listed entities, bookkeeping and accounting services. You see why you must be very careful to know what the opening paragraph tells you in terms of the nature of the business that you are dealing with. Throughout this question, we've been making reference to listed. They sometimes make the difference in your answers. So that would be fine for payroll. Sale of property, what are the views? I'm listening. Oh, Ghana, you are quiet today. What's happening? Hope everything is fine. It's unlike you, sir. Who else is there? Anybody talking to us on sale of property?
Okay, so the sale has been done to CEO, which is a related party. I'll have to quote related party according to accounting standards. A related party is a person or an entity that has control or significant influence or joint control over the reporting entity. In this case, the CEO, who has control over Derico. Now, this so she's a related party. The audit, so the audit team has only confirmed the $50,000 in the receivables with no further procedures, and so accounting standards require that the information about related party be disclosed, which would include the nature of the relationship, the transaction, any amount paid, and any outstanding balances. So while the local authority accounting may not require any disclosure, for group consolidation, there will be need for this to be disclosed. Therefore, that's really, and the 50,000, it's not, look at the materiality set of 1.4 for total assets, 1.4 million, it is not material. That's where the floor finished.
Yeah. All right. Thank you. Well, remember. Yes.
Sorry.
Go ahead.
So it might not be material by amount, but by nature, as a related party transaction. So that's just
good.
Something I need to add.
Okay, good. So by nature, it is material. So that's good. I'm wondering, do you guys suspect anything? The fact that, you know, they said there is so small unused property to the group CEO, which is this. The amount is still outstanding in payments, something that have been sold since February. Do you suspect anything?
Yes, suspect that it's not going to be paid.
Oh, okay. I may not be paid, or even it could potentially
be a bribe or some sort of settlement.
I don't know about bribe. Okay, so
There's a tendency that it was not sold at hand.
okay.
Shay,
Yeah.
sorry, one last thing. The tendency that it wasn't authorized by the board.
Right. I like that. Okay. There's a tendency it might not be a legitimate sale, or it was a sale performed just to, you know, recognize some profits, which may not be you know, legitimate. We don't know whether that amount would actually be paid. But I guess the main thing is what, you know, Arit mentioned earlier on. But I don't think we focused on the fact that we are asked to evaluate and comment on the response. So just like we said, the procedure they carried out on payroll is not adequate because they only just focused on agreeing the number to payroll without auditing the payroll itself. We also need to talk about what we should expect them to do to subject this RPT, which is material by nature, to an audit. So as Arit said, you know, it's a related party transaction. So under IFRS, disclosure required in the consolidated FS or in the group FS, because that's based on IFRS. Then though it's not material by size, it is material by nature. I think what Arit missed out in a definition of RPT, I don't necessarily think you need to go into the definition of RPT, because it may be difficult for you to demonstrate that this guy has control, okay? It's key management personnel. That's really the point here. So it's a member of key management personnel, and the conclusion is that key management personnel have influence, okay, over the business. Okay, they have influence over the business. Okay, so then you have to evaluate the procedures. Certainly, to just confirm 50,000 is included in receivables is grossly insufficient. Grossly insufficient. So, for example, we will need to carry out further procedures or instruct Nigan to carry out further procedures such as, have they derecognized the assets? So derecognition of the assets. Reviewing of the contract. Reviewing sales contract and having that on file, okay? Because I mean, they just said 50,000 and they just checked, okay, have you put the 50,000 in receivables? You've got to check the contract, you've got to have a copy of it. Then another thing is maybe they may have to recalculate the gain or loss on disposal, okay? On disposal. By the way, did we bring up this thing as a risk, as an audit risk when we did audit risk? I'm not sure. Did I put it there? I don't think so. Yeah, I don't think so.
No,
yeah, we could have brought it up as an audit risk as well, okay? So related party transaction is also and audit risk. Okay, we could have put it there as well. Let me go back to where I was. Yeah, so those are examples of additional procedures. Now you can then reflect on the fact that there may be incentive for manipulation. Yeah, do you want to ask a question?
I want to add one. Is it possible to engage a valuer to confirm if the value of that asset is really $50,000?
Oh, yeah, review any valuation reports related to the assets. Yeah, that's fine. That's fine. Yeah, that's fine, because that may even helps to see whether, they are circumventing controls, for example, or it's probably just even gifted to the man. Okay. All right. So instruct Negan. So this is more of, since they've not done adequate work, instructs them to, do these procedures, including what the lady said, valuation of the property. Valuation. So review or it's not that you will get a valuer. Okay, so that's where I think we may differ. So it may be something like what's the name? Just review current market prices, review current market prices of similar, similar ones. Oh, by the way, I might have already started answering the next part of the question, actually, because I think the next part of the question is, what audit procedures will you carry out? Oh, I think I have. And I wanted you guys to talk to me. Okay, so, so the next part of the question says what? The next requirement says, design the principal audit procedures you will instruct component auditor to perform on the sale of the property to the group's chief executive officer. We already have 4 procedures here. Okay, maybe I will just add a few other ones since I already told you the procedures. Review post-year end. Review post-year end. Why are you reviewing post-year end? Why are you reviewing post-year end? Can somebody tell me?
If payments have been made.
Yeah, review post-year end inflows, okay, for payments, for receipts, of payments, okay. Then as someone said, board approval too. You may need to check, did they get the necessary board approval? So I've got all of that here. Take note of the, the style that we agreed. Review, that's the action, right? The verb. Board minutes, that's the subject matter, right? To see if the property sale has been deliberated, that is, as the rationale for the transaction be discussed and formally approved, okay? Deliberated and approved upon, that's the purpose, okay? Now, sometimes the procedure may be so clear on its own that you don't need to start elongating purpose again, okay? So let's look at some examples where I may have that. It says, agree the $50,000 sales price to legal documentation relating to the sale of the property to the group CEO in order to confirm the amount agreed. So this is more like the purpose, but do I really need to put this? Because the procedure itself already, tells us that the essence is to know how much was agreed. So this agree is the verb or the action. The $50 million to the legal documentation, just the subject matter, okay? Relating to the sale of property. Confirm the carrying amount of the property at the date of disposal to the underlying accounting records and non-current asset register. Very important. You want, because you need this to determine the profit or loss they made on disposal. Sorry, can you guys hear me clearly? Or my voice is far from my computer? Speaker rather.
Yes. Clearly.
Okay, good. confirm that the asset has been removed from the company account at the date of disposal. So this is the derecognition. Okay. So look at this procedure now. Confirm that the asset has been removed from the company account at the date of disposal. Even though I'm not too sure I like the structure of this procedure. If I was in the exam hall, I would have probably said, review the fixed assets ledger, okay, and register to confirm that the assets has been removed. Okay, because the way it is structured, a marker can say confirm that the asset has been removed from the ow. Once they put ow, it means that procedure is vague. So I would rather say obtain the fixed asset ledger and register and review it to confirm that they have derecognized, those. Now next, obtain management's determination of profit or loss on disposal. Reperform the calculation, which is same thing as recalculate, based on supporting evidence, such as the legal documentation up there, and agree the profit or loss is recognized appropriately in the company statement of profit or loss. Very detailed and well-structured procedure. Obtain an estimate of the fair value of the property, for example, by comparison to the current market price of similar properties, and consider the reasonableness of the transaction and sale price. Okay, someone already talked about that. Obtain written representation from management that all matters related to related party transaction have been disclosed to the group's management and to the group audit team. Now, this point, this procedure is important anytime you are auditing related parties. Okay, it's part of the standard thing you must do. You must obtain written representation from management that there are no related party transactions that the auditor is not aware of. Same thing here, obtain written representation from the group CEOs regarding the transaction to confirm that the amount is outstanding. So this is some form of, you can call this confirmation, receivables confirmation, right? That is actually confirms that he is owing that amount and it will pay. Just that it's not an external confirmation this time. Review cash receipts after the reporting date. So that's post-year end to confirm whether or not the 50,000 have been received from the CEO. All right, joint audit. I need not start asking you questions on this. I know that you all by now should know the advantages and disadvantages of joint audit. So you remember the context of the scenario is that the company is in another country, okay, and they have their own auditors. But let's even see, where is they said the group is planning the acquisition of a new subsidiary, Michone, whatever name it is. All these names that can break someone's teeth, which is located in Finland. The negotiation is at an advanced stage, and it is likely that the acquisition will take place in October 2005. The groups. Okay, so this is not Daryl. This is related to another subsidiary, and that's the subsidiary they want to acquire. Now, they said the group audit committee has suggested that if the auditor goes ahead, if the acquisition goes ahead, due to the distant location of the company and the fact that Atlanta has no offices in Finland. Remember, Atlanta is the current group auditor. A joint audit could be performed with the current auditors, which is a smaller firm of chartered certified accountants. So, what are the advantages of combining Atlanta with that smaller firm? Number one, the smaller firm is likely to have local knowledge, and not only local knowledge of standards and regulations, but it's also likely to have also add what we call cumulative audit knowledge and experience, CAKE, cumulative audit knowledge and experience, which it can bring to bear so that Atlanta will not miss out anything in doing its risk assessments, in complying with laws and regulations and things like that. I'm sure you understand what I mean. Sufficiency of audit resources and logistics. So this, you can see these are 2 points really. So one benefit is, you know, there will be greater access to a greater pool of audit resources for the current year audit because, you know, 2 firms will be contributing resources as the case is. But from a logistics perspective, Atlanta may not be able to have significant number of staff in farland, you know, for the sake of the audits. So the fact that we are retaining, you know, the current auditor, Mitch, to do some of this audit may actually help to do some of the groundwork. You know, for example, if they have to do physical inspection, for example, you know, they can do all of that and you know, communicate back to us. All right, so we may not be able, or even if you have to move resources, there may be cost implications, okay? Fresh perspective. So we, being a new auditor, working with the local auditor, may be able to bring fresh perspectives to the audit, okay, such that, you know, we are able to say, oh, rather than, you know, doing this way, why don't you just do analytical procedures, or why don't you do test of details here? Audit quality is likely to be improved, okay, because, you know, 2 different firms are likely to, you know, review their own work, which is peer review, you know, ensure that they don't miss out anything. So the workload is probably not likely to be too much. So it's likely that there will be what I call enhanced audit quality, you know, arising from the fact that you have the 2 firms doing the audits. So some people also argue that joint audits also reduces the risk of not only you missing out something, but of being able to, how do I put it now, of it makes it more difficult for management to have their way regarding inappropriate accounting treatment. Because if at all you say, oh, I know the guys at Mitch, I know the partners at Mitch, I could talk them through this accounting treatment, I could get their buy-in, blah, blah, blah. You are not only doing that for Mitch alone, you've got to also do it for Atlanta, particularly for the significant accounting issues. So it's more likely that, you know, accounting manipulations or aggressive, you know, clients will find it difficult dealing with joint auditors. What about the downside? Now, the first thing here is cost. So it's likely to be quite expensive. We all know that joint audits are usually more expensive, you know, than single firm. Okay, and particularly, but however, the benefit is that it may not be as expensive compared to if it was Atlanta alone, because of travel costs and all those logistics costs. Then obviously we know that there's a downside related to disagreement. Disagreement on what? Methodology, for example, methodology. Disagreement on allocation of tasks, okay, of tasks. There could also be disagreements around review points, okay. So when you do peer review and one party is saying, no, you didn't do this way, you should do it this way. Another one will say, no, my methodology does not require that I go to that extent, blah, blah, blah. And all these things have their consequent implications on what? Time. One also, the downside is the issue of joint liability. So they normally say that joint auditors are jointly and severally liable for an audit. So if Mitch misses out a particular area, maybe because their audit methodology is not thorough enough, or they don't have, adequate experienced staff, then that may by extension affect, us, because especially if there are now negligence claims, and that may mean that, our firm may be exposed, even though we did our own side right, so we've got to be careful in that area. Now, look at what the requirement of the question says. It says, discuss whether it is appropriate for a joint audit to be performed on Mitch, Co. Discuss whether it is appropriate for a joint audit to be performed on Mitch Co. Oh, I've been saying Mitch. Sorry, Mitch is not the joint auditor. I think it's another name entirely. What's the name of the joint auditor here? Lucille or Lucille Associates, whatever it is, okay? So it's not Mitch. Each time I've been saying Mitch, I mean the joint auditor, Lucille. All right, so let's go back to that requirement. Discuss whether it is appropriate for a joint auditor to be performed, on Mitch, commenting on the advantages and disadvantages. So what they're asking is it appropriate? So you should recommend, you should give your suggestion, okay? They're asking you, is it appropriate? So don't lose track by just talking of advantages, disadvantages, and you fail to say, I haven't looked at all these advantages and disadvantages. I believe it is okay or not okay. I hope you get what I mean. I believe it is okay or not okay. So that way you have been able to conclude. So what do you guys think? What will be your own conclusion if you were in the exam hall? Are you happy with it, or you think they should not do a joint audit? What do you think?
Joint audit.
Okay.
I believe
good.
they should do a joint audit.
After the one you are due diligence.
Yeah, so the advantages are more. Advantages outweigh, the downside. All right, and then after that, what do? You conclude, okay? Overall, I've discussed blah, blah, blah. You put your conclusion and you move on, okay? So, that's it for our session today. I hope that it was useful. Sorry, just a moment. I hope I did not lose what I've done. Okay, good. So yeah. Now, a few points before we disappear. Sorry, just one thing. This thing is hanging. Okay, it's even gone. Okay. Yeah. Okay, good. So please, give it your best. Do a quick revision of your accounting standards. Very important. Do at least 3 mock exams before you go into the exam hall. Get it marked. If you have questions, something is not clear, either drop a voice note or type it out on the group. We will be happy to answer you. In fact, we think the problem is really people not asking questions. And maybe there may be no questions per se, because to be honest, you will really understand whatever you read at this point. It's just to ensure you have the right coverage. Do a review of the syllabus as I started with this morning, check those areas that you are not comfortable with and try to go back and do that last minute sweep. Attend our final mock review, which is with the date will be communicated after the mock papers have been marked. Which I think is an evening lecture, one of the weekdays. As I said, the date will be communicated. What else? I think you have what it takes to pass. Okay, just ensure you manage your time well. You know, do as much questions as you can do under time condition before you get to the exam. Be comfortable with your IFRS. Don't just read them like they're just browsing through something. But, you know, if you want to pick IAS 36 today, then at least understand what IAS 36 are. Now that you have knowledge of how they test the questions, when you are reading those standards, you should be creating scenarios in your mind. Okay, what could be the audit risk related to this share-based payments that I read? What could be the audit risk related to this non-current asset held for sale that I read? What could be the matters to be considered related to this revenue standard that I read? Okay, so be creating those scenarios. That way it helps you with retention. Other than that, I think we're good. Thank you very much. Is there any question?
Well, Shay, yes, I have a question. Okay, so I had read one of the questions I answered sometime that making materiality judgment confirms that disclosure doesn't need to be made even when prescribed by an IFRS if the resulting information presented is not material. That's number one. Then secondly, I had the impression that for related party, we understand that the transaction may not necessarily be at arm's length and that it doesn't necessarily matter as long as disclosures are made so that the users of the financial reports will have an understanding of what's transpired and they could use their judgment to. So I need you to help my understanding in regards to this question. I know the question made us to go into details and all that. I would not have thought that, despite the fact that it was not so material and all that, that it would be so weighty.
Yeah. So you may have to come back on the first one, but on the second one, that's correct. You don't have to sell to a related party at fair value. There's no requirement to do so. But if, yeah, so whatever you sold to the related party, you need to disclose it because part of the disclosure is the amount involved. Is that not true? So that statement you made for the second one is correct. For the first one, I'm not sure. I think I missed what you said. What did you say? That what?
Okay, so I jotted down somewhere that practice statement 2, making materiality judgment confirms that disclosure doesn't need to be made even when prescribed by an IFRS if the resulting information presented is not material. So for the $50,000 was not, of course, we know that there was there was an intention or could be an intention for the other one, but
No, Audit, hold on. What that practice statement 2 is talking about is a general IAS 1 thing. IAS 1 already talks about materiality. So generally in financial reporting, materiality is considered, and then auditors also consider materiality. If a disclosure is not material to the financial statement, it may not. It doesn't mean you should not disclose. You can disclose, but if you do not disclose, the auditor can modify its opinion because of that. But be careful about what you consider to be material. Materiality is not only by size, but also by nature. That related party transaction is material by nature because it's a transaction with a key management personnel. Okay?
okay.
Any other question? All right. Thank you very much.
There is a question.
Please, quickly. I'm tired.
Yeah, actually, yeah, on the WhatsApp group, I will make a request if you can have a review the mock exam. It has
To be honest, I can hardly hear you.
Okay, can you hear me now?
I can hardly hear you.
Can you hear me now?
Yes, what's it?
Okay, I will make the request for you to help review the question in that we took with ACCA. And it has a lot of no, sorry, it has a few background information and lots of analytical figures attached. Yeah, but since the marking scheme only gives 5 marks to for analytical procedures and 3.
Kingsley.
So how can we fix that? I'd like to look at it.
You may have to drop a voice note on WhatsApp. Your network is poor. It's been breaking from my end. Okay, so just drop a voice note on WhatsApp. I'll check it.
Okay.
You were saying, okay.
Yeah, do you want to say something, the lady?
Oh, I wanted to say what Kingsley was trying to say. He was saying that we requested that you should review the ACCA mock that we did. The question had few background information and more on financials. And he said that analytical procedures is restricted to about 5 marks. So having to structure your answers for audit risk. That's why I wanted you to review the question.
Wait, this mock you are talking about, when you say ACCA mock, do you mean the one Ivy League did?
No,
the one
that
you did for Ivy League, but one ACCA?
The one ACCA did, the Africa something.
Okay, didn't you get a feedback for that? Did you get a feedback?
They've not yet marked it. I think they're still marking it.
Okay. Well, let me know the name of the question. I don't know if I would have time to review it, but you can drop the name of the question on the group.
Okay, thank you.
All right, thanks. All right, thank you, everyone. Have a good week ahead. Bye-bye.
Thank you.
Thank you.
Thank you.
Okay.
Thank you very much for the session.
Thank you.
Thank you.